Well, hello everybody. I'd like to welcome you today on the Monday, the 15th of December, beginning of the last trading week of this year, basically. And it could be a very, very interesting and challenging trading week for all the traders. Let's have a look first of all at the disclaimer. And then we're gonna look at the COT report. From the 9th of December, on the commitments of traders report, we clearly see that the large speculator reduced the positions a little bit, some profit taking in euros and yen. In cable, actually, the shorts have been extended here on the Aussie side, Swissy and Kiwi no change, and on the gold side, the gold bulls basically extended the long positions a touch. Important data is this week we have obviously the China manufacturing PMI, important for all the commodity currencies, especially the Australian dollar. And then for the euro, the flash PMI on Tuesday, and the UK CPI for cable, obviously very important, also on Tuesday, and the German ZEW Economic Sentiment Index also on Tuesday. Important. Now we come then on Wednesday. Actually, the US PMI, flash PMI is important, but not as important as we have the CPI on Wednesday, and then we have the very important FOMC meeting at 1900 hours GMT, which most likely will set the future tone for the market, especially if we are looking on the two issues. It's a quarterly FOMC protocol, meaning basically that on those protocols the Fed participants or the members of the committee publish their views on the interest rates. The last views we had in September, and they were very on the average pretty high indications, up to 3.75% for the year 2017. And about 1.9%, I think it was, up until end of 2015. Now, as those are pretty high actually and do not reflect the current situation on the inflation side, the market largely assumes that the Fed is going to basically, or that the members going to basically review their outlook down, which basically would take some steam out of the dollar bullishness. On the other side, the market is expecting that they change the wording considerable time. In other words, they basically keep the interest rate at current levels for considerable time. Will it change, or will be taken away altogether? And basically what this entails is that if they drop considerable time, the market would expect the first interest rate hike by 0.25%. 6 months from Wednesday, in other words, going to June, July. So that's basically the idea. Now, if they take considerable time out, it's dollar bullish. If they reduce the interest rate outlook, it's dollar bearish. So if you have both, it's going to be an interesting choppy side, keeping in mind that the market already priced in, generally speaking, an interest rate hike. Generally speaking, higher interest rates are already priced in. So we could basically, after a spike in the dollar, see a reversal all the way back down. On top of that, we're going to have the equity markets and the bond markets. On the bond market side, the interest rate is already fully priced in. And on the equity side, we already see some risk-off scenarios, plus profit taking could basically lead to a dollar sell-off in that respect. Now, we have to see and should just simply wait how this is going to materialize. Then on Thursday, we have the German IFO business climax, and then very important for dollar yen, the Bank of Japan monetary policy statement. Now let's have a look at the charts and see where the market's going today and what we have in store. We're looking at the 4-hour charts today to start off with. Cable initially went as high today at 157.23, and then we basically sort of a short sell-off. We went to this level, and then the market decided just pop down. This pencil is not going to work that well, so I use my cursor. I think it looks nicer. And we're basically coming back down to this level. Generally speaking, we are on cable with a trading range, and if you're looking just at the 4 hours, we just can see basically look at the top side, which comes in around 157.50 at the moment, and then we can look at the next one. Area of support or resistance, which we already have, is around the 157 level, and breaching the 157 level brings us lower on cable again to the next support line, the major support line, which is now around 156.25, and once broke on that one, we are basically zooming down lower to 155.48. So for the time being, on my side, no positioning thinking. I'm not thinking of any positioning at the moment for the setups, for the simple reason waiting for the FMC protocol, and it's a moment where we do range trading, and so therefore the market did not really offer a setup for me in the morning, but we will discuss this later on in the pro session. What we're gonna head on dollar yen. Dollar yen is very interesting because we had Mr. Abe. He received about, with his coalition party, 327 seats, I think, something at region. So he can go ahead with his third leg on the Abenomics, in other words, change some laws and make it more convenient or lenient for people to invest, and dry out maybe all this bureaucracy. Nevertheless, dollar yen basically didn't do anything. It, we are here on the 4-hour chart. We had a small step up, make it a touch bigger, this chart, and here we are. Basically overnight, the high was around 118.95, 119, and since then basically dollar yen was just coming off immediately. So the high was 119.05 actually in the night. Yeah, it was 119.05, sorry. Came off down to 118. No, immediately came off lower than that. Here we are. Excuse me, here we are, 117.75, and then dollar yen resumed its uptrend. Sideways market at the moment, back up to 119.15. Dollar yen is basically very interesting in that respect that we had the move up higher. Let's look at the daily chart. From the breakout level from 109.25 with the extension of the QE program, dollar yen went as high all the way as high as 121.89.90. And then we had last week starting the correction lower every day. On Thursday, we really had a small correction on the down move, and basically now we are basically caught in a range between 117.40 on the lower end and roughly the 38 retracement, Fibonacci retracement comes in at 119.12, and the extension may be 119.50. So 119.50 is a very strong resistance. Once broken, the market's going to go up. And if this level is broken, the market's going to go down 200 pips. So either way, we have 200 pips potential movement up or down. Up until then, we're just hovering around in a sideways movement. So there's really no inclination on my side really to go into the market unless the market, and that is what I'm waiting for at the moment actually, is moving slowly higher. Direction 38.2, Fibonacci level 119.10. If it reaches that overnight, that might be interesting to, if the structure is given based on my entry setups on the hourly charts, to re-enter here a short position with target being testing again the 117.15, 117.50 level, but this remains to be seen. If the market just does not turn around, just pops up higher, we just wait till Mark offers himself to take a short position here in dollar yen again. Bullish are only going to get if we are really going higher in the area of extending obviously above the 100 and the 50-year moving average, and confirm this with taking out the 61.8 Fibonacci level around 120.20. Then it's going to be bullish again. In other words, then it's time to rethink of that the market might take out the 122, 121.89 high and resume its uptrend till the year end, maybe direction 122, 122.50. But this remains to be seen, so therefore sidelined for the time being here. On that one, euro dollar is also at the current stage in a sideways market. Looking here again in the 4-hour, let's have a look at the daily chart. We see very clearly we are basically having very strong support coming in. We can see this very nice around 123.65.70. Then we have the year lows around this area, and with the spike down here, but around 122.80 is very good support. We had 1, 2, 3, 4, just 5 times basically we stopped. We just jumped down there, came immediately back. So that's next very strong support. And on the upside, we have very strong resistance for the time being around the 124.80.95 level, and then it goes back up higher to 125.50, and then we're coming actually to the next resistance coming in around the 126, 125.95, 126.05 before the market even can think of moving up higher to the 61.8 retracement to 128. So basically sideways market for the time being. Then we have another small support which the market is just testing today. That's the area here around 124.23. So basically also a sideways market where the market has not made up his mind yet where he would like to go. In other words, can go either way from this level. Technically it looks more though that the bullish side is the preferred side, but this remains to be seen. The market tried this morning first of all to take out this top side. We can see it here now. Here on the hourly, we just jump in the hourly. Here we are. That's where the market tried this morning to take out the top. Did not manage that. Was sold off and stabilizing a little bit in the area around 124.15, 124.17. And we're not going anywhere. So just simply a sideways market, and we just have to see where we're gonna go from here. On the Kiwi, on the Aussie, interesting picture developing here. If you look at the market, we had a move down sideways and basically a market moving down, and the market tried this morning to really try the upside. We went from basically 82 level, 81.95, and new year low, all the way up to 82.65 here on the hourly chart, and then stalled, and the market just came off but stabilized again around this sort of support region. I just make a line here which comes in around 82.05, 82.10, and once taken out, the next target is going to be on the downside, and that's for that one we have to go to the weekly chart and make this picture a little bit smaller. Then we're gonna basically have the next small support coming in around this area at 80.53. So there's lots of space, 150 pips to 200 pips, where the market basically can push down lower still. So this again is going to be interesting on the FOMC protocol. If the dollar regains on strength, Kiwi or Aussie is going to suffer on this one, and the same as euro dollar. So the currencies to look at on dollar strength, my point of view, is short euro dollar. In other words, long dollars against the euro, long dollars against the Australian currency, and that's basically are the favorites. And if the dollar is gonna basically lose, in other words, turns bearish, selling the dollar against the yen would be the favorite one, and buying cable, in other words, buying the pound sterling against the US dollar would be the interesting pairing, in my point of view, if we're going to look at that. Let's have a look quickly in New Zealand dollar. Still here again, also on the daily chart, we still continue to be in a sideways range. Just basically, roughly speaking, that's the upper band and that's the lower band. We had a small extension overnight in the last couple of days down here, but the market has recovered and is trying to go down. Generally speaking, if you look at the weekly chart, we can see very clearly the downtrend, and here the stabilization phase. At the same time, we had it up here as well. So again, we have to wait. No recommendation whatsoever on the New Zealand dollar, especially if you decide to go short. Don't forget it's a carry. You have to pay carry of 3.5%, so that can be quite expensive if the market does not move. So carry trades, shortening in a sideways market is not a clever idea, generally speaking. Let's have a look at gold. Gold again is interesting to see because we're actually here an upward trend channel, and this upward trend channel is part of the overall weekly downtrend. So overall we're in a downtrend, but actually we're sort of an upward trend channel at the moment. And remains to be seen whether the market is going to break this on the downside. In other words, if the dollar regains its strength, then obviously gold and is under pressure today a touch after breaching the 1,200 will attack the 1185, 1192 support region, which is very important. And once we break this one, the market most likely is going to turn down direction 1175. 1175 comes in around here, and yeah, that's basically it. And this wave has to find support. If it doesn't and breaches that area again, we're gonna go even lower, direction 1140, 1135. So that's basically a quick view of the market. So there's potential either way. At the moment we're sideways oriented the market, so it's an interesting market for range traders, going up and down. And the market is testing each band basically. Take euro dollar for example. Here we are on euro dollar. We tested the upside first thing this morning. Now we're testing the downside, and the market just tries to find a way where is less resistance, and that's what dealers are trying to do to maybe make some money. There's no interesting news at the moment which would push this market either way, and the same holds true actually also for the dollar yen. Interestingly enough, we are sort of grinding higher in dollar yen, I would say. You can see now slowly now, we have a doji here, basically return then comes under pressure but finds some support. So I wouldn't be surprised if you're gonna test a 119.05 during the course of the trading day on the upside. And on the euro dollar side, if the region here, the 124 support level gives way, that's what we have now at the moment, then euro dollar can drop again lower, direction 124, and maybe even test the 123.90 area, maybe overnight in Asia, but we just simply have to wait. So it's a market ready to sit back, think about potential entries which might develop. In other words, it could be interesting on the euro dollar side because technically speaking it's more on the buying side in my point of view, to really re-enter a long trade. But we have to see how New York is going to play the next 2 hours with this market, whether it's worthwhile to risk some capital on that or just be patient and wait till we get the really strong impulse potentially on Wednesday night, and then we gonna reposition ourselves potentially for 1 or 2 trading days or overall for the potential of next year. And the most interesting part from my point of view, what I'm looking at is dollar yen, really, for the simple reason in dollar yen we had a very strong up move from 109. Actually, if you take in the correction, just make this picture a touch smaller so we can see more. If we take in the correction down to 105 to up to 121, we had a very big move, and so far just not even a 38.2 correction. It could go lower once broken this 38.2 Fibonacci level. Then it can extend to 115, and once broken we even can extend down to this area and close this gap. In other words, there's potential of 500 to 800 pips on the downside. Minimum potential on the downside, in my point of view, 200 pips. So the market could test this level, also the 60 EMA and the 50 EMA in this area. And once stopped here, we're gonna have retracements or continuation of the overall uptrend. So basically what we have now, dollar yen, a potential correction phase. It just remains to be seen when dollar yen is going to pick up again his long-term up move direction 135 potentially. Well, that's all from me from the chart market analysis for today's trading date, Monday the 15th of December. Some people who follow me all the time see them more laid back and relaxed and see, just see it coming and just wait for it to develop. and then see what the market can give me to enter in potential trades. So potentials for the time being, who really would like to get in the market, in my point of view, is turnaround possible here, finding a basis on today's trading. Could be still the Aussie dollar. If it turns around here, we can go back up, or a potential break at this level. So Aussie dollar is one to watch for intraday trading today. We discussed this, or we'll discuss this also in the pro session. And regarding pro, if you're interested what we're doing in the pro session, let me just put in the link into the box. And that's basically how it's gonna go. Well, thanks very much for your attention, and I speak to you again for the non-pros tomorrow, same time, 8 a.m. Eastern Standard. Thanks very much, and bye for now.